Getting a letter from the IRS. I mean, just hearing those words can make your stomach drop, right? It's one of the most stressful things for any taxpayer. But what if I told you that moment of panic is actually the start of a clear, totally navigable process? Okay, let's pull back the curtain and really demystify what happens when the IRS gets in touch.
So picture this. You're going through your mail, and there it is, that official-looking envelope from the Internal Revenue Service. For our taxpayer, let's call her Alex, a wave of anxiety just washes over her. But this letter, it's not the end of the story. It's actually just the beginning.
You know, it helps to put things in perspective. The IRS only examines about 1% of all individual tax returns every year. Just 1%. But for Alex, that statistic just got very, very real. And while it feels super intimidating, it's a good reminder that this is a rare, but believe it or not, a standard procedure.
So, Alex is officially facing an audit. And your mind just starts racing, doesn't it? You're thinking of worst-case scenarios. Is this a simple question or some kind of major investigation? What do I do next? That feeling of uncertainty is completely normal, but it's something we can replace with a solid, clear plan.
Okay, first things first. Let's talk about the letter itself. The most crucial step, and I can't stress this enough, is to read it carefully and do not ignore it. The letter is your roadmap. It's going to tell you exactly what the IRS is asking about and what kind of audit you're looking at.
Now, most of us have this image from the movies, right? A scary, in-person grilling in some dark room. The reality is usually way less dramatic. The vast majority of audits, including the one Alex got, are correspondence audits. That means they're handled completely through the mail. That alone just lowers the temperature and reframes this whole thing as a process of just providing the right document.
Before Alex even thinks about digging through shoeboxes of receipts, there's this huge realization. As a taxpayer, you have fundamental rights. This isn't a one-sided affair where the IRS holds all the cards. They are required by law to respect your protections through this entire process.
And these are the big ones. You have the right to be treated professionally. You have the right to privacy. But maybe the most powerful one on this list is the right to representation. For Alex, realizing this is a total game changer. It means they do not have to face the IRS alone. So this leads Alex to a really crucial decision, to exercise that right to representation. Instead of trying to figure out this complex system all by themselves, Alex decides to hire a qualified professional to be both a guide and an advocate. Now, you could go it alone. You'd have direct control, sure. But that comes with a ton of stress and a real risk of saying or sending the wrong thing. Professional representation, on the other hand, gives you an expert who handles all the communication. They create this protective buffer, making sure the whole process is handled correctly and objectively.
But who can actually do this? Well, only 3 types of professionals have unlimited rights to practice before the IRS. You've got attorneys, you've got CPAs, and then you have a group you might not know about, enrolled agents. These are tax specialists who are licensed directly by the IRS itself, which basically makes them experts in this very specific arena.
So how does Alex make it official? The process is surprisingly simple. First, you choose a qualified pro. Then you double-check that they're in good standing with the IRS. And finally, you formalize the relationship, so the IRS knows exactly who has the authority to speak for you.
And the key that unlocks all of this is IRS Form 2848. It's the power of attorney. Think of it as the official document that tells the IRS, from now on, this person speaks for me. Once this form is filed, the IRS must communicate directly with your representative, not you. The phone calls and letters stop coming to your house.
So, with a professional now on the team, the audit completely transforms. What was a source of anxiety is now a structured, manageable process. Alex can actually take a step back and let the pro take the lead.
The process now just follows a clear timeline. The notice comes in, the rep gets engaged by filing that Form 2848. Then the IRS sends a formal request for information. But now Alex's representative handles gathering and sending everything. Alex is no longer in the direct line of fire.
So, eventually the audit wraps up and the IRS sends its findings. But what if Alex and her representative think the IRS got it wrong? Well, this isn't the end of the road, not even close. In fact, it's the start of a whole new phase,
the appeals process.
The first step is usually something called a 30-day letter. Now listen closely because this is important. This is not a bill. It's a proposal of changes from the IRS. It's your official invitation to disagree and ask for a meeting with the independent IRS appeals office, which is a totally separate part of the IRS that exists just to resolve these kinds of disputes.
Now, if you don't respond to that 30-day letter, or you can't work things out in appeals, the IRS will issue what's called a notice of deficiency. We call it the 90-day letter. And this is the big one. It's a formal legal notice that gives you exactly 90 days to challenge their decision in U.S. tax court before they can assess the tax.
Let's break this down because the difference is absolutely critical. The 30-day letter proposes changes, and your move is to appeal within the IRS. The 90-day letter, though, states a final determination. Your only move at that point is to petition the U.S. tax court. And that 90-day deadline? It is ironclad. If you miss it, the tax gets assessed and the IRS can start collections. The stakes get much higher.
Okay, so this brings us to the final path. Even after the audit, Alex and her representative still have a bunch of options to chase a fair outcome. It's not a single, all-or-nothing fight.
And look at all these pathways. You can start with an informal chat with the auditor's manager. You can use mediation to find some common ground. You can file that formal appeal for a totally fresh set of eyes to review the case. And as a final step, you always have the option to take your case to U.S. tax court.
And what makes the U.S. tax court so powerful is this one amazing rule. You get to argue your case before you have to pay the disputed tax. In most other federal courts, you have to pay the government first and then sue to get a refund. This one difference makes challenging the IRS so much more accessible for the average person. It's huge.
And so, Alex's story comes to an end. By understanding her rights, getting professional help, and just following the established procedures, her representative was able to navigate the appeals process and get a fair resolution. The fear she felt at the beginning was totally replaced by a manageable, predictable process.
So you see, that letter in the mail, it isn't just a threat. It's the start of a well-defined process, with rules, with rights, and with multiple paths to get to a resolution. The real question is, after all this, when you think of the IRS, will you still think of fear, or will you think of a process that you now know how to navigate?